While banking sector, thanks to the merger of HDFC Limited with HDFC Bank, saw robust loan growth of almost 20% year-on-year and more than 8% quarter-on-quarter at the end of Q2 FY24. However, the sector may continue to see pressure on the net interest margins, or as we call it, NIMs. This is on account of some key factors like cost of funds, which is rising, the end of loan repricing cycle, and incremental cash reserve requirement by RBI, that is ICRR. We may see managements lowering their FY24 or the near-term guidance on net interest margin than the numbers they gave after Q1 FY24. Deposit growth has been lagging the loan growth, hence one needs to watch out for the deposit growth for many banks. Incrementally, the system is at a CD ratio or credit deposit ratio of more than 78%. At a time when liability rates or deposit rates are at peak, the incremental cost of funds would be a costly affair for the banking sector. This can have a negative impact on the net interest margin of the banks. Now, private banks' pro forma business update has been pretty strong. They continue to take away the market share from the PSU banks. Expect slippages or bad loans in a quarter to be on the lower side and better recoveries to aid in improvement in asset quality or the gross NPA and net NPA. Operating profit growth could be weak due to weakness in the net interest income or the NIMs, but lower provisions can aid in strong earnings momentum and may see return ratios remain healthy for all the banks. Now, private banks may continue to invest in their franchisee, which could keep the OPEX or the operating expenses of these banks elevated. For PSU banks, expect strong improvement in their profitability and return ratios over the last few years or last few quarters to continue. We have some of the estimates from Kotak Securities. So, for SBI, they are expecting NII growth of 24.4% YOY and a decline of 3.9% quarter-on-quarter. On the net profit for SBI, they are expecting it to go up by 175% YOY and a decline of 0.1% quarter-on-quarter. For ICICI Bank, Kotak Securities estimates NII growth of 20.2% YOY and a decline of 2.5% quarter-on-quarter. For net profit, they are expecting ICICI Bank's net profit to grow more than 25% YOY and a decline of 2% quarter-on-quarter. For Axis Bank, the NII growth is estimated at 15.8% YOY and about 0.4% quarter-on-quarter. For net profits, they are expecting it to go up by 9.7% YOY and about 0.8% on a sequential basis.